Hi everybody, Lance from ThetaTraders.com here. In this video, we're going to be comparing selling naked puts to the 112 strategy, looking at the pros and cons of both. We're also going to be looking at the same strike prices for both the naked puts and the 112, and why you might want to choose one over the other depending on market conditions. If you find this video helpful, as always, click like, share, subscribe. Definitely appreciate all your support, and let's get to it. All right, so we're going to look at the pros and cons to the 112 strategy and compare those to just simple naked puts. Now, what is a naked put? That's when you sell a put out of the money and you're going to be lower than the current price using your span margin for futures. If you do them as cash secured, you could theoretically get decent returns, but one of the benefits to futures contracts are they use a span margin, so it's a lot less buying power needed to make these trades compared to selling them cash secured. Now, what are ways to earn money through your naked puts? One is through Theta Decay. As option gets closer to expiration, they do have less time to get to your strike price. So for instance, let's say MES is at 4,400 and you sell a 4,000 put 60 days out. Let's say it stays at 4,400 another 30 days or so. So the market didn't move at all. You would have less time to get down to that 4,000 strike price, and then Theta would have decayed those options. They'll be worth less, and then you could theoretically buy them back for cheaper than you sold them at. Futures could also go up in value, makes the naked put even further out of the money. If you're further out of the money, the premiums will typically be a lot lowered. So here's an example of a naked put and how much buying power you need for it. On June 24th, when I'm making this video, 2023, MES was at 43.88. And let's say we sell two of the 40.50 put contracts at 33 days out, and it would take in about an 8 premium. MES has a 5 multiplier, so 8 times 5 would be $40 per contract. If you sell 2 contracts, 40 times 2 would be $80 total premium that you're collecting. And it uses $1,264 in buying power to actually enter this trade using your span margin. And this was with no other positions at play, just 2 naked puts and nothing else. So this is a simple risk return graph on Thinkorswim for the 2 naked puts just explained before. You'll take in $80, this is your net profit. MES currently around 4,400. Go all the way down to around 40.42. That is our break-even point here. And there's about a 7% chance that it would get below this price. So highly profitable trade. You can take in your $80 divided by about 1264. So pretty good overall trade if you wanted to do it just that way. Now what is a 112 strategy though? Very similar, you're going to sell your 2 naked puts, but then we're also going to buy a put debit spread on top of it. For MES, I look to around a 10 debit, so 10 times 5 multiplier, it's about a $50 debit. But we're going to be selling our naked puts for more premium than the debit spread took in. So you would start this trade as a net credit. If you check out my YouTube channel, there's plenty of other videos on the 112 strategy. So here's an example of a 112 trade and the buying power needed. We're going to do the same 40.50 naked puts, so sell 2 of those for an 8 premium, just like before. We're going to add on top of it a 42.70, 42.20 put debit spread, and the net credit after all of this is about 8.5. 8.5 times the 5 multiplier is $42.50 in premium. It uses $1,204, a little bit less than the naked puts, about $60 or so in your buying power. So this is a Thinkorswim Analyze tab for that 112 trade. Take in $42.50 in net credit if it stays above around 42.50 or so. If it goes into the put debit spread, you can make up to $292.50. That's because the put debit spread will be taking in a lot extra profit. And then your break-even point is about 20 points lower at 40.21.75. The other one was around 40.44 so. So what are the pros and cons to both of these? The pros of your naked puts, you do take in more initial premium because you don't have to buy the put debit spread. There would be less commission because you're only doing 2 of the naked put contracts. You're not having to buy the put debit spread as well. You would actually make more profit. It was about double the profit of a neutral or a bullish market because the market doesn't move at all and it's not going to hit the debit spread. You would make bigger profits on just the naked puts. And obviously you don't have to pay for your debit. The cons of the naked puts is you will need more buying power. It was about $40 more for one set of 2 contracts. Your buying power can expand faster. Could use up more buying power as you get closer to in the money. The reason for that is there's no debit spread to hedge against. And again, no hedge for slight downturns. Either a profit will work or it doesn't if you waited until expiration. What about the 112? Some of the pros are there's less buying power used when you start your position. And that example is about $40 less. Your buying power won't increase as fast due to that hedge. This might be one of the biggest pros. So because you have a put debit spread on, if the market starts to drop a bit, your put debit spread will be more likely to make some profit there. So because of that, your buying power won't change as quickly as just simply selling 2 naked puts. You could make more profit if it reaches your put debit spread strikes. If it gets very close to it, you could get some profit from it and then close out the trade. If it's in the put debit spread at expiration, you can make your max profit on that trade as well. It does have a lower break-even point, which is a good thing, because the market could drop a little bit more than just the nakeds because of that profit from the put debit spreads. Now, some of the cons to it, it is more commissions because you have to make more trades. There is less profit if you stay where it is, neutral. If it's down slightly but not at the put debit spread, or if it goes up. And there is more to manage because you have more trades going on. So when do you want to use a naked put versus wanting to use a 112 trade? For naked puts, there is, if you have less time to manage it, it might be better to do just the naked puts. It is a little bit more quote unquote set and forget. You don't necessarily want to do that where you just set it and not look at it, but if you have less time to look through the trades, it is a little bit simpler. And you would save on your commissions. If you care a lot about your commissions, naked puts might be preferred. For the 112, if you want to hedge your portfolio a bit, and slightly bearish markets could be ideal for that. Now, it's hard to know exactly when the future will be a bearish or bullish market. I wish I had the sports almanac from Back to the Future Part 2. Go back in time and then see all the scores. But unfortunately, we can't do that with our futures in the future. If you're willing to take in less tail profit, then you might want to do the 112s and be okay with your profits. So obviously you don't want to set up a trade where you're not really benefiting from the tail profit. So you want to make sure it's adequate for what you're trying to achieve in your goals. And if you're able to monitor and manage your positions, the 112 might be preferred as well. So a common question that I get a lot is, should I just do naked puts? Should I just do 112? There's no clear answer for that. I wouldn't primarily just do one and not the other. I like a mix of both situations and both strategies because they have their time and their place for it. Remember, just naked puts could have a higher profit if the market doesn't move much. The 112 could have a higher profit if the market drops a little bit or a decent amount, but not as low as your naked puts are. So I'd recommend doing a little bit of both just to have different strategies at play, and you can make your ideal goals and your returns. So again, Lance from Theta Traders here. If you're interested in looking at these trades, feel free to join at thetatraders.com. Happy trading and have a good rest of the weekend.